How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Australian dollar versus US dollar. You can see that AU is pushing higher, right? Previous episode, we talked about how price is most likely going to target this swing high formation because we know that the leg is going higher. It's only going to create liquidity pools and then later destroy that same liquidity pool that it engineered here. So that swing high was engineered. It was placed there purposely. It wasn't randomly placed there. It knew later in time that I was going to run it here on Tuesday. And you can see price even gets up to this swing high too. So there's more buy side liquidity here. Not that the IPTA levels are super significant, but there's also other areas of draw. So let's say the overall direction of draw was towards the 20-day high. We still have these swing highs here that are lower than that have buy stops above it. Notice all the swing highs on this leg down, the small leg down, has been rated, except for this one and the 20-day look back high. So it's protecting the swing lows. So right here was the baseline, and everything went higher. Another baseline, everything went higher. We're going to sooner or later see another baseline and price goes higher. Right now, what I'm expecting, you see that price could leave this fair value gap open. Not saying that price will come back down and trade and fill this in, but there's some type of PD array that may form here. Higher swing low can form inside that and go higher, or higher swing low forms off of this down close candle here. So bullish order block theory. Notice some of the tips that we're going to talk about since it's trending up. Buy after down days. If it's bullish, buy after down days. Everything vice versa if it's bearish. You want to sell after up days. Those down days in the uptrend are like discounted days. And that's our natural price indication to tell us, yo, we should be going in and looking for longs. Let's take a look at the DXY. DXY did exactly we expected. Price came down, took out the swing low, 1, 2, 3. Right? The previous episode spoke about this. Price is most likely going to raid this swing low. And if it continues to trade lower, it's going to probably try to get to this swing low down here. So if we were to move this, we move it over here. This is a potential swing low. We have this last down close candle before this engulf candle comes up and price trading down into it. So this could be acting as what? Order block theory. There could be some type of pushback or holding to this area here. However, we can see it's the down candles on the way up. So these could be reclaimed order blocks on the way back down. It's going to reclaim all the buying here, reclaim all the buying here. So let's see how that plays out. And you'll see that other correlated pairs, even NJ still trading higher, right? That means NU is definitely trading higher. EU, right after that higher swing low, price is still going up. It failed to break this low. It failed to break this low in February. It got close to it, turned around, changed direction. We got a higher swing low inside that fair value gap right there. It looks just like GU. Look at GU trading up. What does it run out? A swing high formation. You don't have to make it very complex, which is why I like to track it on a daily time frame. I'm not going to go down to the 30-minute, the 15-minute, define, find trend. I'm going to find and define the trend on the daily chart or the weekly or even monthly. I love the daily because you get to see the progression of the month and you get to see how it's placing certain swing points either above or below the opening price. That's a very crucial thing when identifying characteristics of certain trends. So here we see a swing low, 1, 2, 3. That's the swing low formation. Let's zoom in there. This swing low formation, 1, 2, 3, pay attention, is forming below April's opening price. That's not by coincidence. Right in this formation in 3 days, they went heavily net long. Right here in this down candle, guarantee you they increased their net longs, especially after price took out the previous daily low. Then it continued going up higher. See, it takes out the previous daily low, but then the next candle here, Monday, does not take out Friday's low. Monday takes out Friday's high, confirming the higher swing low. We knew that going into Tuesday, we could most likely be a buyer. If we take a look intraday, right now we got a sell off because we're in London close, right? Reversal to the trend. But if you go down intraday, and we take a look at, where's the London session? There we go. London session, and actually Asian session. We'll throw up the Asian session too. We'll throw all the sessions up. So you can see this is today. This is midnight opening price. This is just before midnight Asian session. What a sell-off here. Wouldn't be surprised because we're taking out buy-side liquidity pools. What's expected after rating buy stops? Price could turn around. Price can give us a retracement or a reversal. We know that. But if you were looking for a long setup today, how would you gauge it? We got midnight opening price. Just take a look at how the market forms its pathway to go long. Midnight opening price, so anything above it's a premium, anything below it's a discount. It's the same thing I'm showing for the monthly opening price. The same idea, fractal idea. Price runs the Asian session low. Asian low is rated. That's a buying opportunity. Want to take a look at my London model? You see we definitely ran sell side liquidity between the dead zone here. We ran sell side. We ran this low. Even ran the Asian session low. And when running those lows, going to the 1 minute, I guarantee you more than likely you're going to see my entry technique somewhere along the lines in here. Take a look. So we're looking for a swing high that is broken with a fair value gap. And if swing high is inside the fair value gap, it looks like it's right here. So right after breaking that Asian session low, this is that low here. This is midnight opening price. Look at how the entry 2 is forming below 2 a.m.'s opening price. So many fractal ideas. That's 2 a.m. Mark this off. Anything above it's a premium, anything below it's a discount. So we're looking for longs today. We've already discussed why we're looking for longs. Because price on the higher time frame broke a swing high and a higher swing low form. We're hunting for longs. We could take this off now, since we got a gauge of that. It's 2 a.m. here. And we look to see price come down. There it is. That's where we look to go long. Institutional order flow entry drill. As soon as it taps that fair value gap, first entry possible, we're long. 15 pips for 15 pips, 1-to-1 scenario, and we look to hold. We want to see price start targeting buy-side liquidity. We don't want to see price taking out sell-side liquidity. We want to see it go up, right? Going into 5 a.m., you can see by this time, the trader would be in profit. Because look at where they're buying. The quality trade setup. We're buying below midnight opening price here. We're buying below 2 a.m.'s opening price. And we brought right after the Asian low was rated. What does price do? It runs all the way back up to the Asian high. Look at where the Asian high is, up here. So you could utilize the Asian session. It could be your friend in understanding, okay, if price is going to get trending, what side of the Asian zone has it taken out by 5 a.m. or by 3 a.m.? By 3 a.m., it's taking out the Asian low. So we said, okay, we're looking for longs. We should be looking for longs now. It's cheap. And that's exactly what happens. If you go back on the 5 minute, just to speed it up, you'll see how price for the New York session also continues to trend higher. So it sweeps some type of sell side. Zoom in real quick. It sweeps some type of sell side here in the dead zone, and then it goes higher. It trades up higher. And now we got London close, huge reversal against the New York session. So this is a typical characteristic of the London close session. So that's 10 to 12 p.m. There's a trading opportunity here, and it could be a reversal, and it was perfectly timed. So if you don't believe that these markets are rigged and time specific and trends based on swing points, like it gets trending based on the swing points it starts to print, then it's going to be harder for you to understand these concepts. So the sooner you get to realizing and believing that it's rigged, it's time specific, and it's only creating and destroying liquidity pools based on swing points, then you'll be able to gauge this market a little in depth. So hopefully you found this insightful. Peace.